we have Thakkar, Senior Technical Analyst at Sharekhan, joining us from Mumbai. Jay, thanks so much for speaking with us at NDTV Profit. What do you make of the market moves today for the Nifty? Let's start with the index first, because today the Nifty has not made a new low, but then it's not convincingly moved above the 8600 level either. So is the correction done, or are we headed lower?
Hi, good afternoon, Anisha. Well, see, overall, I would like to say one thing, that it's too early to say that whether the correction is over or not. The reason for that is, we have continuously seeing low tops and low bottom that's been formed on the daily and the weekly charts, and we are seeing that the low tops continuously getting built up. On the flip side, the positive aspect is that we are not seeing the lower bottoms. So the bottoms are somewhat flat at around 8500 levels. 8500 levels is are the levels which we had seen in August series for the entire month, following which we had seen a breakout in the September series. Then during the surgical strike, we saw the index revisiting to the 8500 levels, bouncing back again, but forming lower top and again coming down and taking support at those levels again. So that means that the flat bottom is what we have, horizontal bottom around 8500 levels, and the lower top is what we have. So the range bound session or the range bound trading continues on the index, wherein the range is getting narrower and narrower with each following consecutive, I would say rather, lower tops. So I would say as of now the range for the market is 8800 to 8500 levels, and wherever we see a breakout or a breakdown from this range, the following trend will be established. So as of now, if someone is trading in the index, I would rather say if they have shorts, they should book the shorts and short only below 8500 levels. And if someone is long, then I think one should place a stop loss below 8500 levels, and if that gets broken, I think one should just exit from their longs, and if at all they are aggressive traders, they can initiate shorts as well. But if someone doesn't have any position, then my clear recommendation would be just avoid trading in index till we don't get a breakout or a breakdown from this range.
All right, so you're looking at a range 8800 at the higher side, 8500 at the lower side. But at the index may be making very frustrating moves. People are making a lot of money in individual stocks. What are your top picks?
Absolutely, that's where this actual momentum is. Looking at the individual stocks, Anisha. Mainly index sideways move is going to be because of the components of the index. So Nifty 50 has around 13 sectors or large cap stocks, of which few are looking good and few are looking bad or weak, because of which index might just trade in a range. But if you look at the mid cap and the small cap index, out there the stocks are really forming good high tops and high bottom. They are providing fresh breakouts in fact, and we're seeing good momentum coming there. So I think one should focus on that area where we are seeing good momentum. I've got few buy recommendation, one of which would be on Schneider Electric. As a disclaimer, I would like to say that we've already recommended all those stocks which I'm going to recommend today to our clients. Schneider Electric has given a good breakout from a base triangular pattern, and it started to form high tops and high bottom. The best part is that it has reversed exactly from the 61% retracement of its entire rise from 2013 to 2015 or 14 end, I would say rather. With the base triangle pattern, it has started to form impulse again on the daily charts. The momentum is absolutely now in control of the bulls, with a good positive reversal coming in. This momentum indicators not only in the daily and the weekly but also on the monthly charts. This clearly indicates that going forward, Schneider is likely to inch towards its previous swing high. However, for the short to medium term perspective, Anisha, I think the minimum target that comes on Schneider is around 190, and one can buy this with a stop loss of 147. The second buy recommendation is on JBM Auto. This stock has given a good breakout from a downward sloping channel, and it started to form high tops and high bottom. This channel was formed in its wave 4 of some degree, and a wave 5 on the upside is expected. In that process, it will take off its previous high of around 300 to 305. However, for the short term, I'm expecting this stock to inch towards the levels of 275 initially, so one can buy this with a stop loss of 220. The third buy recommendation is on Zuari Agro, which has got us clear symmetrical triangle pattern that's been formed and quite visible on the weekly charts as well, with a good buy crossover in its momentum indicators with a positive divergence. This stock is likely to provide a breakout on the upside. So I'm preempting a breakout, and it's likely to happen on the upside is what I think with a high probability. The minimum target comes to around 215. One can buy this with a stop loss of 180. And a final buy recommendation is on Sterlite Tech. It has just given a breakout in today's trading session from a symmetrical triangle pattern formed on the daily charts with a clear buy crossover in its momentum indicators and an increase in volume. So breakout is just not a price breakout, it's a price volume breakout. This stock has a minimum target of around 119. One can buy this with a stop loss of 92.
Alright, Jay, I want your opinion on two Tata Group stocks, Tata Steel and Tata Motors, both of which have done well in the recent past.
Well, Anisha, what I think is Tata Steel, I am bullish for the long term. I think that from the levels of around 199, 200 and till the recent highs of around 414 to 420 approximately, the range, I think we have seen a good run up in Tata Steel. That's a 5-wave rising structure. So I say that, whenever you see these kind of a 5-wave rising structure from the bottom, the probability increases that those lows will not get broken in the near or longer term future. So I think that any dips should be utilized as a buying opportunity in Tata Steel for the medium to long term traders. As far as the short term traders are concerned, I would say one can avoid this on the long side. See, one more thing, Anisha, I would like to say that the rally which we had seen coming in the metal stocks was quite out of the rise in the commodity prices as well. When we had seen dollar index actually falling from on the upside 102, 103 levels right to the levels of almost 94, 95. And now, since we have seen dollar index again reversing from the lower end and now inching towards back to 98 and it's likely to inch towards the levels of 100, 101 in the near term, I think this rise in the dollar index is definitely putting some pressure on the commodity prices internationally, and that would in fact somehow have an impact on all of these commodity stocks out here. So I think till we see the strength coming in the dollar index and till the international commodities remain in pressure, I would like to avoid all the metal counters as of now. But yes, for the longer term, I think they have bottomed out, most of them like Vedanta, Hindalco or Tata Steel. So I would look to buy these, but buy on a significant decline, at least 25 to 30% correction if I get, it would be a phenomenal buy, but not before that. As far as Tata Motors is concerned, Anisha, I think that this stock I had recommended quite a long back, but it's been trading higher and higher and it's forming continuously high tops and high bottom. I think still there's quite a lot of room on the upside for Tata Motors. As far as I remember, I had recommended this stock at around 413, 420, and then again recommended it around 450, 60 levels in anticipation that it will form a new high, and I still think that it will form a new high and it will inch towards the levels of 600 initially, and thereafter it will surpass its previous highs of around 613, 14. So I am bullish on Tata Motors. I am not seeing any weakness as of now as far as the medium term levels are concerned. So I'm bullish on Tata Motors. One can add these levels as well, and one can buy on dips, but Tata Steel avoid as of now and buy on dips.
Alright, so those are your views on to Tata stocks. What about the mid caps? You've given your picks. Among the other mid caps, especially from the oil and gas space and infrastructure space, are there any names that stand out?
I don't think so. See, I'm not interested in this stock as of now. Despite of my view on crude is quite bullish, I think it's likely to inch towards the levels of $58 to $60. I'm talking about the NYMEX crude, which has in fact helped all of these oil companies to in fact perform quite well in past couple of trading sessions, or I would say a couple of weeks, wherein we have seen a bounce back coming in crude, and we have seen GAIL, Kane, ONGC all performing quite well and retracing their previous fall, and I think they can continue to do so till crude manages to trade higher and higher. I think there is a good inverse head and shoulders pattern that's been formed on the international crude chart. That's either you take it a Brent crude or NYMEX crude, and based on that I think the rally might just continue in crude despite DXY, that is dollar index, moving higher. This time I'm not seeing any correlation between the dollar index and the crude, wherein generally they both move in the opposite direction, but this time around they're just moving in the same direction. So this kind of thing you see sometimes happening, but I think both of them are looking good. Now till crude is looking good, I think this oil and gas sector might just do good. But I don't have a longer term view on these stocks, and I would generally like to avoid this entire space. Within oil and gas sector, one stock which one can keep in mind is Reliance. But that too, reversed from the upper end of the range. It generally reverses from 1100 to 1150. So till we don't see a clear breakout above 1150 levels and a close on a monthly basis above 1150 levels, I think why to enter at the upper end of the range? Traders or the investors have made such a mistake of entering Reliance around 1100 levels in quite many a times in the past. So I don't think the same mistake should be repeated. If at all it provides a breakout on a monthly basis, then only one can enter this. The rest of the other oil and gas sectors have run up quite a lot. They may still continue to do so along with crude. But this is one space, Anisha, where the momentum doesn't really come or you don't get that gamma, I would say rather, or the swift move, I would say rather, and those stocks wherein you don't find that swift move, I think I like to avoid those stocks.
Yeah,
Instead I switch on to those stocks.
Yeah, you do get the swift moves in some of the bank stocks, and banks have corrected quite severely over the last few sessions. Which banks look vulnerable at this point of time? Are any presenting any buying opportunities?
Sure, Nisha. See, banking space, as far as my view is concerned, for the long term, I think it has bottomed out. Definitely at around 13,500, 14,000 lows, which we are seeing in February this year. I don't think we're going to revisit those lows again. But the correction which has already started in banking stocks, I think few of these stocks might just break their February lows. And those stocks which are at the risk of that, or something like that happening into those banks are Bank of Baroda. The second would be ICICI Bank among the private sector. So these are the two major stocks wherein I think the previous lows might be broken. I don't say it will be, might. So there is a chance out there. Rest any bank you take, whether it is Kotak, IndusInd, HDFC, SBI, I don't see that risk in any of those stocks. So these are the two major stocks wherein I think one should avoid going long right now, and that is Bank of Baroda and ICICI Bank.